Good afternoon.
Good afternoon, Mark. Good afternoon, members of SIAS and participants. Good afternoon, distinguished delegates. Thank you for joining us. The theme for SIAS CG Week this year is Building Trust Through Effective Corporate Governance, Navigating Legal, Ethical, and Social Challenges. The conference took a deep dive into potential gaps in oversight and information flow that can lead to decision-making failure and how companies and boards can plug the gaps to build trust with their stakeholders. The key is in laying out or strengthening the foundation before trust can be built. We can only build trust when there is a relationship, and a relationship is developed on an active two-way communication. NIRI, the Association for Investor Relations, the largest professional investor relations association in the world, defines investor relations as a strategic management responsibility that integrates finance, communication, marketing, and securities law compliance to enable the most effective two-way communication between a company, the financial community, and other constituencies, which ultimately contributes to a company's securities achieving fair valuation. Now, investor relations gained greater significance after the establishment of the Sarbanes-Oxley Act in 2002, in the aftermath of the Enron, Tyco, and WorldCom scandals. Here in Singapore, I'm pleased to note that disclosure standards have improved over the years, as evidenced by the better annual GTI scores and rankings. Though standards and practices differ across the universe of listed companies, big caps generally score better, mainly because they are better resourced. Regardless, building trust comes from the core driving motivation to engage all stakeholders, not just institutional investors. Companies must give equitable treatment and access to all, including retail investors. Let's not underestimate the influence of retail investors. According to Bloomberg Intelligence, retail investors' share of total trading volume doubled from just about 10% in 2011 to 22% in 2021. The average individual now has a growing influence, with everyday investors accounting for 52% of global assets under management in 2021, which is expected to rise to over 61% by 2030. According to the World Economic Forum report, retail investors are moving markets, influencing institutional investors and having macro effects. Trust begets trust. We should therefore regard all investors as worthy of trust for information and education. Transparency and empathy are key ingredients. It is paramount that listed companies must be driven by the spirit, not just the letter of the regulation. They must act above and beyond adherence to the applicable laws, rules, and guidelines. It is not just compliance, but a genuine intent to engage, build understanding, and establish relationships with all stakeholders. And it is not just a function that is relegated to the investor relations department. Building trust starts at the top, from the board to senior management. Now, Principle 11 of the Code of Corporate Governance 2018 states that the company treats all shareholders fairly and equitably in order to enable them to exercise shareholder rights and have the opportunity to communicate their views on matters affecting the company. The company gives shareholders a balanced and understandable assessment of its performance, position, and prospects. Engagement with retail investors cannot just be an annual event at the AGM. Rome was not and cannot be built in a day. Likewise, companies cannot expect their shareholders to know their businesses, understand the challenges they face, or appreciate the strategies adopted for growth, until and unless companies proactively reach out to build understanding and support for their corporate journey throughout the year, not just at the AGM. As more and more channels of communications open up and are popularly adopted in many markets, listed companies must move with the times. In addition to the traditional platform of official announcements, they can consider social media, dialogues, more briefings, investor days, open houses to their operations, etc., etc. Best practices are not static. They are evolving, and companies must be agile and quick to adopt some of them. SIAS is at the disposal of listed companies to facilitate better communication with shareholders. We are ready, equipped, and available to work with companies to build and strengthen relationships with their shareholders in good times and especially in bad times. Our doors are always open. In short, we are ready to help companies build confidence and trust with all stakeholders, to have the comfort and assurance that their investments are in good hands. In conclusion, I must stress that the key to effective investor relations is proactively reach out, garner understanding, develop rapport, and build trust. Thank you.
And thank you, Mr. Gerald, for the opening comments. I do have a question for you, though, about how that's going, because you pride yourself to bring companies together over a cup of tea in the boardroom, not the courtroom. How many of the issues that you then usually deal with are a result of poor communication as opposed to, well, I guess more fundamental or operational issues at the company?
Okay, in my 24 years at SIAS, I've come across a number of companies who have run into problems with shareholders and EGMs unnecessarily petitioned because the company failed to put out its case properly and in a simple, understandable manner. They sent out a circular, but the circular is voluminous and it's got language which is far beyond retail investors. And many of them don't read it. But they do know that the company is calling for an EGM to pass a corporate action, be it merger and acquisition or privatization and the like. And let me just bring to the attention of the delegates today the case you might remember of NetSteel, which was the very first company that was listed in Singapore. And NetSteel wanted to actually do something which I thought was horrendous. They wanted to link two resolutions at an EGM before the AGM. And the two resolutions is that you should approve the amendment to the M&A to allow the company to pay dividends in scrips and not in dollars and cents. And you know, Mark, NetSteel had plenty of retirees, and it was a dividend play stock for a long, long time. It was the very first one, and it was paying good dividends. And holy Moses, suddenly they wake up and find they're not going to get dividends. And you know, they didn't know why. There was an underlying reason which they could not fathom. They are not astrologers to know what the company is thinking, right? So they did not communicate very well. And they said, take it or leave it. If you don't vote for that, you don't get your dividends. The next resolution is to pay dividends. And therefore, it was intertwined. And it was, you know, either both or nothing. So we had to intervene. Because lots of mums and pups, retirees knocked at our door, and we had to intervene. And we were trying our best to get the board of directors to sit down with us before the AGM. I even drove up to Jurong to deliver a letter. That time we didn't have Grab and we didn't have, fast delivery. So I drove up all the way from city to Jurong and handed a letter. Please see me before the EAGM. Let's talk this and settle this. We can vote for both, but you should not link the resolution, because tomorrow another company will say, pay the directors $1 million, or we are not paying dividends. It was setting a bad precedent.
How did it turn out, Mr. Gerald, for those of us who weren't following events back 24 years ago?
Yes, I mean...
Did they acquiesce?
Sorry?
Did they acquiesce? Did they see things your way?
Yes, no, they did not. And we therefore turned up at the EGM and we got the resolutions. We got the resolutions turned down. We defeated their attempt. So that was a very poor performance. And that was an example we thought should not be followed by other companies. And other companies got the message that if you do that, SIAS will step in and we will stop it.
But Mr. Gerald, what about cases like the Isetan dividend issue of many years gone by? Or do you remember the privatization of Keppel Tele and Trans?
Yeah, I mean, I remember Isetan very well, where they wanted distribution of credit, taxation, the tax credit, which was they had about 60 million in the bank, and the retirees were trying, and the minority shareholders, trying to get the independent directors to bear upon the board to distribute. But there was no engagement between the directors and the shareholders. Shareholders went to the press because they could not reach the directors. So there was no communication. When there is a communication failure, what happens? Desperate shareholders try all sorts of things, and they call for EGM. And the company spends a lot of money, and they exercise the majority vote, and they kill the initiative. But we intervened, and we had summoned the directors to SIAS, a conference room in the boardroom, and explained to them, look, many shareholders, we apologized on behalf of the shareholders who went to the press. And these are Japanese directors, they have a different culture. And our culture is different from theirs, right? So we had to bring them together and make them understand. And they understood. They appreciated that the head of the Investors Union in Singapore was prepared to see them and, do it the Japanese way. And we did. And we got $1.30 immediately distributed. Right. So these are... Sorry,
Mr. Gerald. In other words, this wasn't a case of them looking to do something, to sneak something by retail investors. How do you tell the difference between whether or not the company takes this action because it has some underlying motivations, or simply because it's just poor at communication?
So there has to be a two-way communication. There has to be a discussion. There has to be face-to-face meeting. And only then you will discover what is the underlying reason if they have not disclosed. And in this case, the Japanese didn't want to pay tax, because if they take the money, because they are majority shareholders, and if they declare the distribution of tax dividends, taking money back to Japan would have meant a lot of tax being paid. So instead of that, they were going to abandon this. That was a silly thing to do. It's like so you're right. I mean, there has to be meeting of minds. There has to be, shaking of hands. There has to be sipping of tea. And then you'll find these things happening in Asia. I don't know whether you read the Business Times headlines, which I told shareholders, when you deal with Asian bosses, please don't break their face. Give them face. We are not in America or England, where it's a litigious society. You can deliver a summons and tomorrow have tea with the boss. But here it doesn't happen. The moment you send a legal letter, you're gone. They won't see you. And they have the tyranny of the majority all the time works here. All right. So,
what do you make of cases like Keppel Tele and Trans and the takeover? Again, this is going back many years, I realize. But clearly, shareholders voted it down because the company was clearly undervalued at takeover. I guess the question that I'm getting to is, are these companies communicating poorly, which is, of course, the subject of our seminar today? Are they doing so inadvertently, or are they deliberately not saying anything in the hope that nobody will notice a resolution such as the dividend?
There is an absence of realization that meeting shareholders and explaining the rationale for their action, it will be a win-win, rather than keeping quiet and saying that we can do what we want to do because we will not do anything else other than what we have decided, right? So you take that attitude, and if you have the majority vote, sad that, you know, small fellas won't get what they should get, or they can't defeat it. But where the position is where it's not, the majority vote is not concentrated, then it is a different story. Then shareholders need to be organized under one umbrella, and then we go and get it done. Now, let me tell you, over the years, Mark, there is a realization amongst the corporates, and I give credit to investor relations companies. They are working very closely with their clients, and they are putting this point to them very clearly. You need to work with SIAS, all right? And you need to meet the shareholders on our platform and expound very clearly the rationale for your action. That is the basic. Tell the people why you want to do this. Win them. Now, it's just like the government going out there, or the parties going out there for election, you know, and how they campaign. You got to get the grassroots into action. And we are a grassroots organization.
Indeed. Any concluding comments to set us on our way for our panel discussion, Mr. Gerald?
Yes, I think there has to be a two-way communication and a realization from the inception of any corporate action that talking to investors is absolutely important, not just in institutional investors, but treat the retail investors equally with respect and trust.